everyone. This is Leslie Jouflas with Trading Live Online, and welcome to this segment of your Daily Five. Well, I thought today we talk about what to buy during a recession, as there's so much talk about recessions right now. So I thought it might be a good topic to cover. And I also wanted to show you this slide, especially highlight the book Trade What You See. Generally, if I have this slide up here, I have available in 5 languages. Some of you very astute watchers may notice that it now says 6. So we've just gotten a new agreement with a publisher for Spanish. So Trade What You See is now available in, or soon to be available in 6 languages. Well, I think probably before we talk about, maybe things to look at to buy for your portfolios during a recession, let's just talk a little bit about what is a recession. And so it is a significant, pervasive, persistent decline in economic activity. So you've got to look at different economic reports that come out and see if they start to fit this definition. And they're measured from the prior expansion's peak, economic expansion's peak, to the downturn's trough. Just like in technical analysis, we measure a lot of things from the peak down to the trough. So a general rule of thumb is that 2 consecutive quarters of decline in the GDP is recession, and there have been 2 consecutive declines. And so some people, economists, are saying we're in a recession. Some are saying we're not in a recession, but we will be in a recession. And some are saying, oh, we're not going to have a recession. So you can see how clear cut it all becomes. Well, one thing that a lot of economists look at and technicians is the inverted yield curve, and that is currently inverted. But one thing to notice here is that it has predicted the last 10 recessions, but also a couple that never materialized. So there isn't any one thing that can just tell us a recession is here or coming. There is one economic factor, though, the unemployment rate. And I know Larry Williams has talked about this a lot. He does such excellent work with all of these things, that the unemployment is high. So we're going to look at a chart today of unemployment and see if it's fitting into the picture of recession. So this is looking at the unemployment from October all the way down 2021 into July 2022. August is not on this graph, but it's right around the 3.5% mark as well. So we don't have high unemployment right now. So that's not quite fitting into the picture. I am not an economist, so I rely on other, people that are economists and things to uh, sort of sort all of these things out. But what I'm interested in as a analyst, technical analyst, and a trader is what markets and what sectors should we be looking at when the conditions are telling us that's where we should be. Well, another kind of interesting thing to know, and I think to keep in mind, so the recession doesn't have to scare you to death, is that, how long do they last? And on average, around 17 months. And the shortest one was in March of 2020, just 2 months. We had that, tremendous down move from into the lows of March 2020 and a very fast recovery from that. And the longest one was 1873 to 1879, and this is according to the National Bureau of Economic Research. And there are different types of recessions. We won't go into them all here, but here's the slide if you want to look at those and read all of those. Here's a look at the dynamic yield curve, and you can get this right on StockCharts. They have so much information on StockCharts. I'm always finding new things there to look at. But you can see here that the yield curve is inverted. Back in 2007, 8, 9, there was an inversion of the yield curve, and you can see the tremendous drop that there was, or look at how fast, this spiked back up. It did stay, and it took until 2013 to get above these previous peaks, but that was a pretty good rise up into the 2013 area. And then you can see from here a continuous uptrend. And this uptrend, looking at this chart, we've not broken it, not until we break like these lows down here. We're still making higher highs and higher lows. This is also from the National Bureau of Economic Research, and it's just showing the relationship between the unemployment rate and recessions. And the gray area are the recessions, and the blue line is the unemployment rate. And you can see back here during the pandemic, 2020, how high the unemployment rate was, but you can see down how much it's collapsed down to, again, we're about the 3.5%. So still at low rates. So I think a question to answer is it necessary for us as traders or investors to say, yes, we are in a recession? I don't think so, because I think we can follow different things in the markets to tell us what type of sort of environment, what's moving, what's not moving. That's really, I think, what's important for us. So here's a list of the 11 stock market sectors. They're not listed in any particular order here, but I've also put the symbols on the chart on these corresponding sectors. So now let's take a quick look at the business cycle, because I think having an understanding of the business cycle and being able to get just an idea of where we are in the business cycle is a very good relationship to have with the market sectors. So at a glance, this chart kind of walks us through an entire cycle of the business cycle and which sectors generally do well within those stages. Now, of course, being in the markets it's never quite as clear cut as this, but I think it's a fairly good roadmap to sort of use, and then you can look at these individual sectors. So once the market bottoms and starts to turn back up again in the early bull market, a lot of times it's difficult for investors to recognize it's an early bull market. Many times it's still a lot of fear and not much interest in the stock market at this stage. But generally, financials, technology, consumer discretionary are doing well. As the market starts to move off of that bottom into the mid to late bull market sectors, materials, industrials, energy, telecom. However, I will say I think energy is more towards the end of this into the third, can go into the third stage of it. And then in the third stage, as the cycle is starting to come down, healthcare, staples, and utilities tend to do well. So let's take another view of this same cycle. So here we can see that the blue line and the blue shading, that's the economy cycle phases, and the red is the market cycle and phases. So again, looking here where the market bottoms, which again is not always that clear, of finance, technology, and cyclicals. Generally, interest rates are starting to come down. Technology, many times there's some type of new technology that's coming out that's starting to lead the market. In cyclicals, also tend to start to do well coming off the bottom. And then you can see technology is also in one of the stronger phases of the bull, and right into the bull market with industrials, basic materials. The credit is loosening. People are starting to build and do more business and buy more inventories and so on. So these tend to do well. Then again, towards the market top, basic materials are still doing well. energy and staples start to come into the picture. And as it rolls over, energy, staples, healthcare, this is kind of really what we're seeing right now. But a little more of the utilities also are mixed in with what we're seeing currently in the markets. And some of the financials are starting to look like they're showing some strength, which they haven't really for a little while. So there's just a glance at that to give you sort of a feel for those cycles. And again, it's unfortunate. It's too bad we can't just see everything as clear cut as this every day, when we go into the markets. But you can do some homework and you can set up your list in StockCharts, and you can start tracking them to see what's strong and what's weak. So here's another chart from StockCharts, a perf chart, and we're looking at from October 2021 to August 2022. And everything above the line is positive, everything below is negative. So here we see that here's energy. These are all color coded. So energy has been the strongest, and then staples, healthcare, and utilities, what we just sort of looked at. We can match up with where we are in that business cycle. Well, from there, for as far as your portfolios or trading, healthcare sector also includes biotech and pharmaceutical companies, and there's other branches of it as well. But if you're in a down market, you want to be looking for the strongest companies. If they decline with the overall market, they're probably going to decline less. Companies that pay dividends are also desirable to be looking at. Again, you can use ETFs, but if you're picking individual stocks, then you want to be looking at the kind of cream of the crop or that. And same with staples. Staples are going to include personal products, household products, food and beverages, and even alcohol and tobacco. I guess people in recession start to drink more. Hopefully, hopefully not much, and especially smoking. Yeah, don't do that. Anyway, so those are definitely areas you want to be looking at. And again, utilities also can do well in market downturns. And we have been seeing those move the last few months with these other sectors. It would probably be wise to really stick to, the cream of the crop, but those are probably going to be most of the large cap stocks are probably going to be the ones that you want to be looking at. If you look back on some charts, you're going to notice that the Dow Jones Industrials coming into this year had been lagging. Um, but then they started to pick up steam, and that's where you're going to see a lot of these big companies. So it's worth your time as well to sort of keep an eye on the indexes, because I've said for a long time that if you sort of have your finger on the pulse of the indexes, that can kind of lead you to which sectors and industries you want to be looking at. So one other, thing, of course, bonds are something investors sometimes will be purchasing more of in recessions. There's a bond called an I bond. You can, Google it, just I bond, and those currently are yielding a little over 9%. So you can Google it and see what the requirements are and the specifications for that. So thanks for joining me today. I hope you found some useful information and how you can kind of use the charts to help you really not, I'm not an expert in economics. So I can't tell you if we're in a recession, going to be in a recession, we were in a recession, but I can certainly look at the charts and be aware of the cycles and what's starting to gain strength and what's starting to weaken. And from that information, you can then, pick what you want in your portfolio or things that you might want to be scaling down in your portfolio. Once again, I'm Leslie Jouflas of Trading Live Online. Feel free to visit me at my website, Got lots of trading courses, the weekly market setups where I go over this type of analysis each week with you. Well, I'll see you on the next Your Daily 5. And everybody, I hope you have a great week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.